Hi, what I want to do now is just to introduce you to a simple example of accounting for property, plant and equipment using the revaluation method, where we have an increment and then a decrement. I'm going to start off with an initial fact situation. We've seen it before. On the 1st of July 2015, Plummet Airways bought equipment for $250,000. It was expected to have a useful life of 5 years and a residual value of $50,000. Depreciation was calculated on a straight line basis. So, as with the cost method, we'd recognise the acquisition of the asset in the first instance, debit asset $250, credit cash $250, and we'd have to recognise depreciation at the end of the first year of $40,000. We'd recognise that at the end of the second year as well. However, what we know at the end of 2017 is that the equipment has a fair value of $180,000, useful life and residual unchanged. And so at this point in time, we can see that the asset has a book value of 170, a fair value of 180, so therefore there can be a revaluation increment. The process of recording an increment starts off by reversing the accumulated depreciation against the underlying asset, so debit accumulated depreciation, credit the asset. That gives us a net value for the asset of $170,000. And then we'd recognise a revaluation increment to increase the value of the asset up to $180,000, and we'd recognise the revaluation increment of $10,000 in other comprehensive income. Now, to keep things simple, a year later, the asset's now deemed to have a fair value of only $110,000, useful life and residual value unchanged. Now, at the end of 2018, what we can see is that the asset has a book value of $136,000, and that is $26,667 more than its fair value. So we have to have a revaluation decrement. The process starts off by reversing the depreciation again against the asset. So that gives us a book value for the asset of $136,000, and then we have to recognise the decrement. Now, normally decrements would go to the statement of profit or loss, but of this decrement of $26,667, $10,000 is a reversal of a prior increment, so that would be adjusted against the increment and go through other comprehensive income, whilst the revaluation decrement initiating of $16,667 would be recognised in the statement of profit or loss. And what you can see that gets adjusted against the value of the asset, and it reduces the asset to having a revalued amount of $110,000.